Good morning, welcome to Bitcoin Bounce. My name is Joseph. I'm here with Dion. So I was watching this video of the trading Parrot. I love the trading Parrot. Get so much good stuff about DCA trading from him. And he is looking at these two important Bitcoin signals on his indicators. And he reckons, especially if you're a long-term trader, that this is a time now to buy. This little uprun that we saw right now is triggering a lot of indicators and giving a buy signal. So I want us to watch this clip together. But before we jump in, Dion, what do you think? Is it a good time to buy Bitcoin now or not?
For sure, it's a great time. If you just look at this is the weekly Bitcoin chart. We're trading in this narrowing falling wedge, and these always break to the upside. It's really getting to the point where you can see we're about to break out here. We've been following this trend for 7-8 months now, since November last year, and we've tried to break through quite a few times, and it looks like now eventually we're about to break that line, and then it's an awesome time. You can also just see, looking at it, that Bitcoin is very, very low at the moment, and the bottom is in according to us, and from here on we can only go to top side.
Yeah, I agree with you, Dion. Definitely, so many proper analysts that's not emotional driven reckon that we are either at the bottom or very close to the bottom. So I already, when Bitcoin dipped a little bit, I made a big purchase of Bitcoin, and I pretty much bought now my Bitcoin. And I actually said to Dion, I'm going to try and keep it until Bitcoin hits $35,000. I also made a strong purchase on Ethereum, and I want to do the same thing. So I've bought it because I believe the bottom is in. I don't think Bitcoin is going to go to 13,000. There's a lot of reasons why I think so. But let's jump in and listen to the trading Parrot and listen and get some idea of why he thinks this is a good time to buy Bitcoin right now.
Let's go with the first indicator. This is a very cool chart. It's based on the number of unique addresses that appear for the first time in a Bitcoin transaction. This shows that new people are joining into the network. You can find this information directly when you search by BTC_new addresses on TradingView. The problem is when you load this information, it doesn't really look much meaningful. So there are two things that I do to understand better this data. I pull in two MAs, and one is based on the yearly, and the green one is based on the monthly. On 2017, you can see here that there is a very important bearish cross of the 30 below the yearly, and that has flagged the beginning of the bear market. We got a very similar signal here in May of 2021. That's where the majority of the new joiners into the Bitcoin network started dropping dramatically. In other words, there was way less interest in Bitcoin compared to before. We did have here a dead cat bounce that trapped a few more bulls right before entering into full bear territory. In 2018, we had three interesting bounces. After the third bounce, we finally managed to get the 30 above the yearly, and that was a movement of almost 300%. And many people believe that Bitcoin is experiencing diminishing returns. So that means that if we flag on this signal a bullish crossover, which I'm expecting to happen around the 12th of October if the trend continues in the same direction, we could say that 100% is on the table, but 300% is less possible given that Bitcoin is subject to these diminishing returns. As you can see in the chart, there are also some fake outs, sometimes where the 30 crosses above the yearly, but it doesn't necessarily constitute the beginning of a bull market. The same goes with bearish signals. You can have some fake outs as well. So as you can see, I have set an alert for when the monthly is crossing up the yearly. I also have an alert for when there's a cross down, although that's going to take a long time to happen. The second analysis is inspired by one done by Crypto Crew University. I encourage you to have a look at his channel. I have made a few alterations to the original approach that we're going to run into. This is also based on on-chain data analysis. The network value transaction ratio is pretty similar to the PE ratio used in equity markets. When NVT is high, it indicates that its network valuation is outstripping the value being transmitted on his payment network. This can happen when the network is in high growth and investors are valuing it as a high return investment. Alternatively, when the price is in a sustainable bubble. To be able to see this data on TradingView, I'm using one of my indicators, TTP Volatility MVT, which has 3 modes. The first mode just shows MVT. The second mode shows the NVT, but plot on top of the HV volatility indicator, and it can also be plot on top of normalized ATR, which is also an indicator of volatility. CryptoCrew University uses HV to display this indicator, and what he's looking after is for areas that are green. The areas that are green correspond to when the network is very healthy in terms of network value transaction ratio. You can see that right now we're crossing about the threshold where the network starts becoming really healthy. If we plot this on top of HV volatility, we can see that we are at an area of low volatility. And the way that CryptoCrew University is doing the analysis of this chart is that every time the network becomes healthy from an area of low volatility, we get a bull run. Like for example here, where Bitcoin goes massively bullish, or this area there from 2018, which flags the end of the bear market. You can see also some small movements when the network goes into green. There is some pullback. When it goes back into red, we've been in red since May. And just now, mid-September, the network started going back into the green. If we look at the same data, but now using the normalized ATR, we can see how low is the volatility since around March. This is basically saying that most of the volatility occur in this area of Bitcoin, and all these movements have been very mild in terms of volatility. What we want to see in this chart is a movement where we go higher in volatility, but at the same time, the NVT ratio is in the green. In other words, is staying in the healthy area of the network. Same in 2018, when we were very shallow in terms of volatility and we started increasing the volatility with a healthy network in green, then we had our bull run. Currently, we are in the green, and this all day has been flipping from red to green. If this closes in green and it starts coming up, we're going to have another confirmation that a bull run is in the process of building up. For that, we need the MVT ratio to stay above this threshold. And at the same time, we need to start seeing more volatility. To look at volatility, I use specifically this chart where I have the NATR in the chart, the Bollinger Bands with the normalized ATR and the HV all in the single chart. If we just focus on the Bollinger Bands with, we are at the lowest level of volatility since around October 2020. There's never ever been so low volatility in the Bollinger Band width, and this is on the daily. On NATR and HV, we're also below thresholds of very low volatility. And you know what that means. Low volatility usually means that there is going to be a squeeze momentum, an impulsive move, and that can be in any direction. But starting to see that the network is showing some strength is starting to increase little by little the chances that that move might not necessarily be another dump. In fact, it could become a pump.
Awesome, guys. Thank you. I hope you enjoyed this video with us. We'll be back again on Friday with some excellent trades, and Dion is also going to be with us to give us a signal. Have a fabulous day.
Thank you, guys. See you later. Cheers.